The internet used to argue about politics. Now it trades them. In early 2026, Polymarket lit up headlines, not over the next election or a meme token, but because someone turned a $30,000 bet into over $400,000 by predicting the ouster of Venezuela's president Nicolas Maduro just hours before it happened.
A more than $400,000 mystery has been uncovered following the capture of former Venezuelan President Nicolas Maduro.
What happened is one trader on Polymarket turned roughly $33,000 in a $400,000 profit in just a matter of a day.
And that wasn't some fringe wager. Markets on whether the US would invade or intervene had millions of dollars tied up, and sparked fury when Polymarket refused to pay some contracts, saying the events didn't meet its strict definitions. This is prediction market mayhem in action. Real-world events, real money, and real controversy, all traded like a futures contract. It's where opinions have price tags and headlines turn into tickers. Instead of checking polls, people refresh "Will Venezuela regime change" charts the way crypto bros refresh Bitcoin prices. And the wild part? These markets can feel more accurate than professional forecasters. But accuracy isn't free, or necessarily honest. So before you buy yes shares on the next geopolitical shock, ask yourself, what is Polymarket actually selling? Truth or just another bet?
Somebody in New York City wants to make New York City their dream of free groceries alive, and it's all a fraud. It's $1 million quasi bribe to somebody in the city for Polymarket.
For years, prediction markets were a nerd's fever dream, a place where academics and gamblers could argue over election odds and call it data. But in 2024, that niche curiosity went mainstream. Polymarket, the crypto-based prediction exchange, saw trading volume explode past $150 million a month, with individual bets on the US election alone drawing more money than most mid-tier hedge funds move in a day. Media outlets from Bloomberg to Politico now quote Polymarket odds like their poll results. When a candidate gains 5 points on Polymarket, it's news, even if nothing in the real world has changed. On paper, it's a utopian idea. Let markets find the truth. If prices reflect probability, then the wisdom of crowds should reveal what's really going to happen. In theory, this could replace biased pundits, partisan polls, and the endless punditry of what if. Why ask an expert when you can just check the price of, will the Fed cut rates in December? But here's the problem. The crowd isn't the world. It's a few thousand crypto traders, speculators, and Reddit prophets, whose idea of research is checking how many rocket emojis are on a tweet. This isn't democracy. It's decentralized Vegas. And while Polymarket bills itself as a platform for information discovery, what it's really discovering is that people will gamble on literally anything, as long as you call it data. The scary part is that it's working. Polymarket odds have beaten major polls at predicting outcomes, not because traders are smarter, but because money moves faster than truth. When the next scandal breaks, or the next meme drops, the market updates instantly. So it's no surprise the platform slogan might as well be, don't believe the news, believe the price. And if that sounds reasonable, wait till you see how the system actually works.
And how accurate is it?
It's the most accurate thing we have as mankind right now, until someone else creates some sort of super crystal ball.
At its core, Polymarket is basically Wall Street for what-ifs. It takes real-world questions. Will Trump win? Will Apple launch an AI iPhone? Will it rain in London tomorrow? And turns them into tradable assets. Each market has two outcomes, yes or no. You can buy shares in either side, and those shares cost somewhere between $0 and $1. If your prediction happens, you get paid $1 per share. If not, your shares go to zero. The current price shows the market's implied probability. A 70-cent yes share means traders think there's a 70% chance it'll happen. It's elegant, simple, and deeply addictive. Example, let's say you think Taylor Swift will endorse a candidate before the election. Shares are trading at 0.25. You buy 100 shares for $25. If she does, you double your money to $100. If not, you just paid $25 to learn a hard lesson about parasocial relationships. Behind the scenes, Polymarket runs on the Polygon blockchain, using USDC stablecoin for all trades. That means every transaction is public, settled automatically by smart contracts. No bookies, no middlemen. Just algorithms and your worst impulses. The company itself doesn't take positions. It just collects a small trading fee on every market. Think of it as the casino house that doesn't care who wins, only that people keep betting. Markets open, odds shift, traders panic, and prices spike with every new headline. When Trump sneezes on Truth Social, Biden to win odds can drop by 5%. When a poll leaks or an indictment hits, you can watch reality itself reprice in real time. It's brilliant and ridiculous, like a truth machine that runs on greed. Because in theory, these prices reflect the collective wisdom of informed people. In practice, they reflect who's online, who's angry, and who just got paid in crypto. And that makes Polymarket less like a data platform and more like the Bloomberg terminal for conspiracy theorists. So if it's this chaotic, why is it working? That comes down to three big drivers shaping how this new market for reality actually behaves. The dream of Polymarket is that it represents the wisdom of the crowd. The reality is that the crowd looks a lot like 3 hedge fund guys, 2 Silicon Valley quants, and 1 dude in his pajamas betting his rent money on memes. Despite the branding, a handful of traders control most of the volume. The top 1% of accounts handle an estimated 70% of total bets, meaning that what looks like a democratic market for truth is often just a few whales moving prices like political day traders. In theory, this isn't a problem. Those whales bring liquidity. They make it possible for everyone else to get in and out of bets easily. But in practice, it means that when big traders move, the odds move with them. If one data scientist drops $200,000 on Trump wins, the market suddenly screams that Trump has a 70% chance, and news outlets report it as if the Constitution itself said so. It's not the wisdom of crowds, it's the confidence of capital. Big money sets the narrative, and everyone else just reacts. In that sense, Polymarket doesn't democratize forecasting. It financializes belief. And when belief has a price, truth becomes just another trade. If Polymarket is a stock market for reality, then timing is everything, and reality doesn't always move on schedule. You can be completely right and still lose money just by being early, which makes the game less about knowing the truth and more about guessing when everyone else will believe it. This is where the market's supposed brilliance starts to look a lot like chaos. Prices swing not when new facts emerge, but when traders think everyone else is about to react. A debate gaffe, a viral clip, a headline about someone's health. Any micro event can send probabilities flying. And because it's 24/7, Polymarket is less a reflection of steady judgment and more a live feed of collective panic. In financial terms, this is called reflexivity, the idea that perception drives reality as much as reality drives perception. But here, it's basically a self-fulfilling prophecy. If enough people start buying Biden drops out, the odds rise. Then journalists report those odds rising, which convinces more people that it's true, which makes more people buy in. By the time the dust settles, you're not forecasting anymore. You're chasing momentum. So while Polymarket loves to brag that its odds are real-time probabilities, what they're really showing is real-time belief velocity. How fast people can change their minds, not how accurate those minds actually are. It's truth, priced like a meme stock. Every system reveals itself when you follow the incentives. And Polymarket's incentives are brutally simple. Someone always wins, someone always loses, and someone else collects the fees. Start with the winners, the people who need the illusion of prediction. Data journalists love it because it gives them numbers they don't have to defend. According to Polymarket, now sounds as credible as according to the Fed. Hedge funds love it because they can treat mass psychology like another data set. For them, Polymarket isn't gambling. It's sentiment analysis with a profit motive. And of course, Polymarket itself wins every time someone hits the refresh button. The platform has quietly built one of the most profitable niches in crypto, a casino that calls itself a think tank. But the losers? They're easy to spot. Retail traders convinced they're investing in truth. Political junkies betting their emotions instead of probabilities. The crowd that mistakes volatility for insight. They bring the liquidity, pay the fees, and leave with lessons about learning markets that sound noble until you check your wallet. There's also a bigger, quieter loser. The idea of objective forecasting itself. Once money enters the conversation, truth becomes a derivative, a side product of speculation. Every financial incentive pushes traders to exaggerate, to hype, to manipulate perception for a temporary price move. The market doesn't reward accuracy. It rewards attention, and that's the paradox. Polymarket works best when the world is least stable. When chaos reigns, trading volumes spike. When uncertainty fades, people log off. The platform's entire business model depends on a future that always feels uncertain and profitable to argue about, which makes sense because in a system where outrage and volatility are assets, calm and clarity are bad for business. Polymarket's homepage looks like certainty dressed as math. Every question has a clean percentage beside it. Trump 68%, rate cut 42%, Taylor Swift engagement 12%. It feels objective, almost clinical, like someone finally bottled the truth. But those numbers aren't probabilities, they're prices, and that's not the same thing. A 70% chance on Polymarket just means traders are willing to pay 70 cents for a dollar-sized payout. It's a measure of conviction, not of reality. And conviction, as any economist or cult leader will tell you, is easily manipulated. One big wallet, one viral rumor, one tweet from a trusted insider can yank that number 10 points in either direction. What looks like the wisdom of crowds is often just the liquidity-weighted mood swing of a few confident people. Traditional pollsters deal in error margins and demographics. Prediction markets deal in dopamine. Their data updates instantly, but instant doesn't equal accurate. The market price reacts to information faster than humans can verify it, so misinformation gets priced in first and corrected later, if ever. That's why a rumor can briefly make an event look 80% certain, even when it's total fiction. The illusion works because the math looks clean. It's comforting to imagine a single number summarizing the chaos of politics, economics, and celebrity gossip. But Polymarket's decimals aren't truth. They're sentiment with a spreadsheet attached. They capture how strongly people want to be right, not how likely it is that they are. So when you see a market claiming there's a 65% chance of anything, remember, it's not forecasting destiny, it's quoting a price on collective hope. And hope, as we keep discovering, trades a lot higher than it should. Polymarket started as a bet on truth, but it ended up revealing something much simpler. People will trade anything if you give it a price tag, even reality itself. The internet used to be a place for opinions. Now it's an exchange for belief futures. You don't argue your worldview anymore. You leverage it. And maybe that's why it works. In a world where institutions feel broken, prices feel honest, there's no trust, no experts, just a number that updates faster than anyone can lie, that's the seduction of it. A clean digital oracle for an age allergic to uncertainty. But Polymarket isn't selling foresight. It's selling participation. It's the perfect system for people who want to believe in something, but only if they can cash out. So yeah, you can buy shares in the future. Just don't forget, somebody else is always shorting it. And if you made it this far, congratulations. You're now emotionally leveraged. Like, comment, and subscribe to rebalance your portfolio, I guess.